the cost of money or the return for investment, right? But then inflation starts kicking in. What does the Fed do? Changes either the Fed funds rate or, right, by manipulation of the market, or changes the discount rate, right? Nonetheless, interest rates rise. Okay? Inflation keeps going, they raise interest rates even more. And they can really affect the short-term rates. The long-term rates are very difficult, so they're much more sensitive on the short end of the curve. Okay, what happens, and by the way, this is a very, very quick version of what we're discussing, but what's happened here? Interest rates are 8% for short-term borrowing, but only pay 5% on the long run. They call that an inverted yield curve. And that's where the interest rates are too high now. Okay, so someone said, interest rates, Fed raising interest rates bad for the stock market. No. When you're in this part, when you're in this area here, it's just fine. In fact, it gives the green light for the stock market to go up because why is the Fed raising interest rates? Because there's inflation. Why is there inflation? Profitability. Money is being spread around. People have cash. Okay, you see what I mean? So as long as you have sort of the profits where the cost of borrowing is lower than your return, then the difference for a business is going to be the profit, right? So you borrow $1 million at 3%, right? But you have a 5% profit margin. It's all good, right? So it keeps going up. The stock market's going up. People have money. They're buying more shoes. And everything's good, right? Because every quarter you say, we sold more shoes. And then you keep buying more shoes. In fact, your orders are getting bigger than before. And then now the shoe company is reporting good things, and then your money is going to them, and then they're hiring people, and the economy is ticking along until you get to a point, though, the short-term cost of money is larger than your profit margin. So if you're borrowing at 6% and your profit margin's at 5%, okay, that's where you run into problems. And so you need to make a decision at some point where you should take profit on your stocks, start moving to bonds and cash and other things, okay? So I'm not ready. So the interest rates going up on the short run, let's say in 2016 and 2017, when we're actually going from 0 to, let's say, 2%, that's actually a good thing. It's not a bad thing. It's normalizing. We don't need false manipulation of the market to stabilize the economy, right? So that'll be a good thing. And then the economy will just be chugging along, building full employment and creating, positive inflation and good GDP numbers and all these things, and everyone's happy for a while until it starts getting too hot, and then the Fed will have to start raising a little more, so on and so forth, until they raise too high, and you won't know until they've burst the bubble. Or at least that's what history tells us, right? That the Fed's not really good at knowing when to stop. So that's your job, my friend. All right, so as long as we're not, we haven't even started to normalize. Normalize means interest rates shouldn't be at 0. Okay, so and the normalization, let's say inflation's 2, interest rates are 2, we're in balance and harmony. Fine. When things get out of control, that's when I'm going to look to go short dollar. But that could be 5 years from now. I don't know. I have to look at the numbers. But don't worry about interest rates going up, in my humble opinion. Okay. All right. So that's that. Let's do some technical analysis. You know what? I'm going to get my drawing tool. I just feel more comfortable. So anyway, stock market coming down to me is just normal. People markets booking profit at the end of the quarter. So your mutual fund manager, for example, is going to have to send out a little report to all the shareholders. And they want to say, we made money. Because I do not believe they're mark to market. Forex is mark to market. All right. So here we go. Stock market, right? You see the nice behavior here? Okay, right? Double top, lower high, off of this. Stock market drops to where? Support. Then what? Reuses previous resistance to drop. Drops where? To support. Lots of this is price action. It's just beautiful price action, guys. Just beautiful. The consolidation before the reversal, and then the drop, and then the pullback. Little hesitation, drop, pullback, and then time of day. So we're not at the end of the month, but it is the last Friday of the month. So who knows what goes here? I'm not going to predict a big reversal or anything. But on the hourly chart, can you see that there's something going on here potentially? So if you wanted to play that, a one touch of support, rally up, right? Higher high, or sorry, higher low. If you were a bull, you'd probably look for that. Okay, let's go to the news trade. Let's look around the world. Around the world, around the world, around the world. Oh yeah. Yeah, Jenny from the block wants some pound dollar. Yeah, all right. Okay. Let's see. You can see my general idea here, right? Let me get my drawing tool. You can see that we have the down, the up, right? And then of course I have this pointed down. So here we are, we're retesting the zone that I already have marked as our second chance area. You can see that it's a sell zone within a sell zone. So the way we might be playing this now is just some consolidation. Okay, which is interesting because we're waiting for April 16th, right? What's going on April 16th? I believe we talked about it last Friday. The IMF report, thank you. How does it feel to suddenly be smart money? Does it feel good? Yeah, cool. One of our goals was to get you in your first 1,000 pip trade, right? This position you see open here for a while was up 430 pips, I think. I'm sorry it's taken so long. Sorry, dude. Sorry it's been taking so long, but market's just not cooperating. Yeah, typically you don't get your 1,000 pip trade in the first week, right? I got almost halfway there. All right, so I don't know what more to say about the British pound. It's just this trade has been set up for a month or two now. The first short here we did at Trader's Way. This was sell at 55.55. Wow, that didn't right. Let's try this again. Wow, slow today. 55.55. We set that up 2 weeks before price got there. Okay. And it dropped to 146 and some change. So let's just say it only dropped 850. I know, I'm sorry. Then the next one, you can see here, I shorted here. That's at 151. I think it was just right below 151.50, actually. Okay. And then that dropped to 146. Okay, so now we're sort of in this process. I am a little worried that we came back and then we failed for a while, but I don't know. I'm okay. I'll ride it out for now. Well, the question here is, are both economies strong? I'm not ready to say that about the UK yet. Okay, there are signs that there's hidden strength, but deflation and stuff are making it difficult to see that. So we need a third party to come out and say, we've had our PhDs studying this economy for months and months and months, and we've decided that the UK economy is good. So we need the IMF to come in and say that. Okay? So that's why we're waiting for April 16th. Because we need more than, we need more than fact, right? We need everybody else in the market to trade. So it's not even necessarily the facts that are important. It's what the other market participants are going to do. And half the time they're either confused or misinformed. So we need sort of a big voting party like the IMF to come in and say, trust us, it's good. And get the other market participants to behave appropriately, right? So do you see an upward zigzag fib to upside ABC? What? All right. Well, I guess it's what your time frame is, right? So let me do it. Let me do it this way because it's going to cloud the way I see things, right? Our original plan was this. Okay. I know. Crazy complicated, right? But that's what it was when we were down here, in fact. And so we used this area, previous resistance, 618 Fibonacci retracement, and that was worth 1,000 pips, maybe actually a little bit more, okay, because the 618 predicted the 1382, and you notice where we stopped? Look at that, guys. Isn't that nice? The 618 predicted the 1382, and look what actually happened. So now the second leg here, and I guess I'll change my chart here. Let's do it this way. The second leg of the move, and let me get rid of that. The second leg of the move might happen like this, right? So let's say this 382 holds. 382 now predicts 1618, and that's 140. All right. So the first one, the first 618 to 1382 was 850 pips profit, and now this one, if it holds, in fact, you know what? I'm not going to call it a. I'm going to change here because I forgot. Even though that's where the candles are, this is where I'm actually short, right? So let's call it a 50%, which then makes you take the little more conservative one. So again, it's still 1,000 pips, right? Where am I short? 51.50. What's the target here? 51.83. Yeah. So these are just nice little swing trades, right? So the first one it did move 850, and the next one should move about the same, a little more, something like that. Blah 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 blah. Oh well, if it doesn't hold, it's going to go higher and knock you out. I don't know what the future is going to be, right? But right now you can see I'm short here, which I like. I think that's a good trade. I still have reasonable confidence, right? Why do I have reasonable confidence? Because hope is a strategy? No. Because on the daily chart, price is still below the 21 EMA, which means I'm bearish and I'm aggressive. That's it. I don't need to complicate it anymore. It's amazing, though, isn't it? How simple yet how powerful it is. I'm below the 21. I'm short. I'm aggressive. Everything's going my way. If it breaks the 21, I might have to readjust. And I'll tell you what, if 21 breaks, I'm still bearish, but I believe it'll go back up, double top off of there, and then come down here, and then double bottom, and then potentially reverse. So I already have a contingency plan for that. 21 is a 21 EMA. I'm sorry if you guys are new. I've been doing this at FX Street now for 8 years or something. So I just assume everybody knows my settings. That's not a good assumption. But anyways, this orange line is the 21. So by the way, if you're digging this, like you're really enjoying this webinar, and you're like, you want to speak, the language of Wayne McDonell, FX Street has a couple of videos that I did, I don't know, 5 or 6 years ago. It was a 3-hour webinar on strategic and tactical Forex trading, and goes over my setups and what they mean and how I trade them and all that kind of stuff. I highly suggest you watch that and get on board the Wayne train. So we need to speak the same language, right? So, for example, I look at if the 21 is below the 55, I'm a bear, and I'm looking at the angle and separation between the two moving averages. Okay? So here I'm bearish, I'm aggressive, I'm done, I'm short, I'm profitable, and I'm going to let it run. Okay? So now if you drop into a smaller time frame, which is probably what Jenny's talking about, the way I look at this is range bound. Okay. Okay. That's all I see here. So I have to ask myself, should I freak out about my short trade? No, not at this time. Okay. Because I believe eventually the odds are that it's going to break in the direction of the prevailing trend. Okay? And get at least to this double bottom. To this zone, right? At least. Kind of in there somewhere, right? Bare minimum. And then in that case, we're just trading the bigger range, which is the here to here. Right now we're in sort of the micro range. So the way I'm eyeballing this chart is like that. But the macro trade here is the one that I've already drawn out. Last Tuesday of last week, I drew this trade out. No, wait, sorry, Thursday of last week. I'm sorry, Thursday of last week. That was our trade plan. Sell it at 150. What a crazy trade plan. Okay. So now it's just kind of let it run. And any of these smaller time frames, Jen, I'm going to be brainwashed by my own nonsense because I'm already thinking all of that. I've already had it planned out, and if every time it drops, I'm confirming to myself that I'm right. Now that's called confirmation bias. It doesn't mean I am right, but it's going to change the way I look at the charts. All right, I think I'm right. And I have 250 pips floating profit to confirm how I feel about it. So if things go well and we start to make a lower high, lower low, then the second follow-on trade is another 1,000 pips. Okay. But I'm going to worry until I'm not going to worry about it until the middle of next month. How about euro? That was an easy one yesterday, right? Yesterday, I did a 1-hour speech about using fractal geometry to set up a reversal trade in a reversal zone that we had identified days earlier. And I spent the whole hour yesterday talking about setting up a 1-hour stochastic oscillator cycle and its congruency with a 15-minute stochastic oscillator so that it would go up for temporarily and then drop. Was anybody there for that? That was at tradersway.com. Spent like the whole hour talking about short-term up. Let's see if I can even squeeze this in now. I got to do it on a 15-minute chart. Okay, let's zoom in here. An hour, guys, that's a long time, right? When you're talking about one trade. Oh, come on, MT4. Let's do it this way. Come on, let's do it again. So, will it let me? No. All right, that's the best we're going to get it. So we had this. Okay, we had this oscillator. I know it's hard. I wish I could have it better, but anyways. And so the idea when we were here was it was going to rise for approximately, up to 2 hours, and then it's going to fall 12 hours. Can anybody confirm that? There is a recording somewhere. Oh yeah, YouTube. And so what actually happened is it went up for 45 minutes, made a 50% retracement. Okay, and then what did it do? It fell 200 pips. And I spent a whole hour discussing why it would do it and that it was about to do it, right? Like literally, it's about to do it, so let me spend an hour explaining it. It just happened 1 hour earlier. But of course, that part's a guess, right? Cool, huh? Cool. Sometimes they work out. Sometimes they don't. But that was a nice one. It started on this hourly chart. So let me show you here. Okay. The hourly chart was like, I think it had just crossed, but price hadn't fallen yet. Almost like a divergence, right? So it was like this up in here. My drawing tool's having a heart attack. Hang on, let me get rid of it. Okay, so we had that. That's an hourly chart. And what does that oscillator say to you? Now remember, don't trade just because of an oscillator. We were at resistance, at a psychological level, at a pivot cluster, at resistance we identified a week and a half earlier. So don't tell me you're going to throw down your life savings every time you see a stochastic oscillator. Okay, that's like the least important thing here. But anyways, what does that stochastic oscillator say to you? Up or down? Okay. Using standard operating procedure for boot camp methodology, that is much more likely to fall. You got it. It's overbought, waiting to fall. So down. Okay. So the topic of the conversation was the 15-minute chart says up. How do you play it? How do you put your trade together, guys? Isn't that the ultimate question? Have you ever run into that problem where you look at one chart and it says up, and you look at another chart and it says down, and you don't know what to do? Yeah, I mean, that's the hard part of trading, right? Yeah. So that's why we discussed it. I said it would fall for 12 hours. Minimum. 12 hours, but not yet. Why? Because again, if you go to that time, we drop this, let's mark this here. Okay, ready? Let's mark this. Okay, when we were, where's it here? Oh, come on. Okay, when we were there, it wasn't ready. So we go to a 15-minute chart now. What did the 15-minute chart look like at that moment? If I got that right. Where'd you go? Did I miss it? There we go. No, that's not right. So I didn't catch it right. It looked like this. Okay. All right. So the hourly kind of looked like the one to the left where it wanted to fall. This one didn't look right, did it? Right? It was probably more like that. So the hourly says sell, 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 sell. But does this 15-minute oscillator say sell, sell, sell? No, and there was the problem yesterday. So how did we play that out? And that's where we started doing this, right? What's the maximum that cycle would take? That would be 2 hours. Where's the sell zone? Well, it's going to make a lower high, right? And then it's going to do this. So let's identify the fib zone, blah, 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 blah. But we knew based on the hourly chart, or let's say our theory on the hourly chart, was to sell this and be short. So we had two things as far as timing. It was going to rise, but no more than 2 hours. And it was going to fall for at least 12 hours. Okay? So depending on how long this took, this might have been 1, 2, yeah. So 40, it took about an hour and 15 minutes. And then it fell hard and fast. Okay. That's that. Now, the other interesting thing about this, it was lots of good trading yesterday. Um, I shut my drawing tool off, so let's use the other one. All right. So let's try this. Let's do. Oh, great. They have lots of lame colors. All right. Plethora of lame colors. All right, good. So you get a 50% retracement, right? And then a drop. Once you make a lower low, what do you need to do as a price action trader? Fib, yeah, you could that's okay. Role reversal, yeah, which is the same thing almost always, but let's take out sort of, one technique over another. I'm just like, let's just eyeball it, right? My favorite way to trade is just eyeballing it. Okay, so that used to be support. So in the future, it's likely to become resistance again. Okay, it came back. Yeah, but Wayne, it took a whole hour to come back. And that's too fast for me, right? Is that what you're thinking? Wayne, I only have an hour to set up my Euro USD short. It's too fast. What were you doing for that hour? All right. So, anyways, down, 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 down. What do you do once it's made a lower low? Roll reversal again. What used to be support is now resistance. That's going to be in the neighborhood of your new short zone. So price came down, retested, short. Once it's made a lower low, what do? Mark the roll reversal. And why did it all disappear? I don't know why it just disappeared. Let's try it again. All right, so now you got this area as your roll reversal, but you also ran out of time, right? So what did the London boys do in the morning? Because, this is, we've had, okay, there's the New York Open, there's the second chance, there's the third chance. Now London's closed, New York's closed, moves sideways, but stays below your roll reversal. What do the London boys do when they check in the next day? Continue mission. So look at this. It's funny. Now I can't turn the annotation off. How do you turn it off? It turned itself off. There we go. Okay. And so now made a new lower low, and then you should have this marked basically where that 382 is. You should have that marked as a new roll reversal. So it either falls very soon from now, or it's not going to. Okay. Yeah, not buy low, sell high. So let's make a comment for the record here. You want to stay with the trend until the trend is proven to you that it's failed. Okay, so when you're in a situation like this, as long as you're below this line, you're a bear. Until it does this. Now you're no longer a bear. Okay? So that's basically what happened for the London Open. We never made a higher high. Right? Because our line in the sand here is this area. Let's see if I can use a drawing tool instead. Square shape. Okay. Oh, come on now. I wish that could be filled. So that's sort of your new sell zone. Can that be filled? What is that? Eraser, line. Maybe I can make a fatty line. No, double arrowhead. No, no, no. What is this? Allow, annotate. All right, not the world's greatest drawing tool. But anyways, so as long as you're below that, you're a bear. So Igor says you think it'd go up to 910 and then something, something, something. Yeah, all right. Well, that's what trading's all about, right? The best thing about that is you have an opinion and you're thinking about it and preparing about it. That's good. My opinion on this is if it stays below this sell zone, I'm going to sell it. Okay, if I'm looking at just this time frame, it looks like it wants to come up to the 200 EMA. Okay, I think really we're just going to move sideways. So I move to the hourly chart. What does it tell me? Actually, it still tells me up, but notice what we have going on here. Role reversal, right? Just like I was showing you on the other time frame. The basics of this. Right? So I think that's what I'm going to want to do for a while. Okay, we're in a zone here which I find acceptable. Okay, I'm going to sell this. I don't want it to go any higher than it is now because of the 21. I don't like the oscillator, but it's trending, so I'm not using an oscillator in a trend. So for now, I'd like to stay short. And in fact, if you were thinking about shorting it, this might be the exact time to be doing it, that touch of the 21. Now let's talk about GDP. We got Q4 coming out. I don't really care, but it'll probably be news. So let's prepare to trade the news. Okay. You ever use binaries for that? Hang on. Let me refresh this so we get all new binaries. Hang on. I like when I could see the time and it posts the time. There you go. So this binary ends in a minute. So you could change and say, let's say you want to short, let's say you want to front run the news. I don't like trading this way, but some people do. So you could say it just over 15 minutes, this binary will expire. So let's say you think the news is going to be good, the Euro USD is going to come down, right? Now, in 15 minutes, if you use a binary, Euro USD could jump 100 pips against you and it wouldn't matter. You wouldn't lose any more money. If you're in the cash market and you shorted Euro USD just before the GDP number came out and you were way wrong and the Euro USD moved 150 pips, you'd get punched in the face, right? If you're in the cash market, you're like, whoa, 150 pips, holy crap, I just got punched in the face. In the binary, you're either right or you're wrong. So it could jump 300 pips against you, you wouldn't lose any more money. There's no risk management involved. Your option would expire worthless. So you paid 25 bucks for your option. Doesn't matter if you're 1,000 pips wrong, you lose your 25 bucks. If you're in the cash market, oy vey, it's going to hurt, right? So let's do something dumb. I don't like trading this way, but let's do something dumb. I'm going to short Euro USD. It expires in just over 15 minutes. News is coming out in 90 seconds. I'm going to place a short trade without technical analysis or anything. I didn't do any analysis. I didn't do nothing. But now we're in a trade. And look at, oh, it's on my MT4. How sweet is that? My binary option trade is right there on my MT4. I just shorted off of a roll reversal with an hourly 21 as resistance. Sweet! How lovely is that? Lovely. And the way that you track this is you go down here. Oops. There's my trade. Shorted Euro USD. If I'm right, I'm going to make 45 bucks. If I'm wrong, I lose 25 bucks. And it expires shortly. Cool. Estimated profit. Yeah. Isn't that nice? So basically, it's a one-for-one scalp because the reason it only pays 80 to 85% has to do with the bid-ask spread, which is the same as if you were doing a 25-25 OCO, right? It's your 25-25, but your limit is going to have to also include your spread. So really, it'd be a 25-22, right? So it's the same. But the benefit versus a 25-25 OCO is I can't get knocked out. So let's say the news, and it's coming out any second now, the market jumps up 150 pips and then reverses and drops 151 pips. If you were in the cash market, you probably will get stopped out. You might have taken a bloodbath if it jumped your stop and then you got out and lost 100 pips. In a binary, it doesn't matter. I would get my full profit there, and I was never taking on any larger risk than I originally purchased. Jen, it was just over 15 minutes, so it'll expire at 8:45. All right, here we go. Any second now to the news.
2.2% for GDP, 0.2 lower than expected, but in line with the preliminary. Consumption at 4.4% is in line with expectation. Price index 0.1% is in line, and the core PC at 1.1% also in line with expectation.
Okay, let's get out of the binary market. The cash market does move more smoothly. Let me show you how to do that with MT4. There's the binary, but here's the cash. Boom, see? All right. So initial reaction is up. All right, so if I was in the cash market, every one of these pips is hurting me. In the binary market, it doesn't matter to me. I'm either right or I'm wrong. Doesn't matter.
Data, the difference between the preliminary, the second reading, and the final reading, we did see a slight uptick in their exports from 10.1% up 10.4%.
Yeah, we don't really care about the headline, Carlos, unless it's a big miss. We're looking at the subcomponents. Non-residential fixed investments, fine. Residential fixed, fine. Well, actually, you know what? Residential and fixed investments are higher, 3.8 versus 3.4. That's a good number. Exports up 4.5%. Wow. That's way better than expected. I wonder why. Oh, oil prices are probably still high, huh? That's probably what it was. Government consumption, expenditure, gross investment, don't have that number yet. You guys want to read the release? Yeah, it's Friday. You got to read this government report so that when you're at the bars tonight, you can impress the ladies. Oh, yeah, so I was on the government website and I was reading the PDF. Oh, yeah. Did you get that GDP, girlfriend? So that's the actual GDP. That's what people report. Yeah, read it, because chicks dig it. Yeah, no, why? That's because I live in the South. That's what they sound like. All right, so is there any chance that if you were in the cash market, you freaked out and got out of your short trade for a small loss? Because it jumped against you? What do you think, guys? If you were short before the news and all of a sudden a huge green candle? Marina, you probably should have. So that's one benefit of being in a binary. It doesn't matter to me. Oops, wrong chart. It doesn't matter to me. It doesn't affect me if it goes up 50 pips, 500 pips, 5,000 pips. I won't lose any more money. So I don't care. I've already made my trade. I'm either right or I'm wrong. And look at this, guys. So I'm not panicking. Doesn't bother me. There's no stress. It jumped up, and now it's back in my favor. Okay. What if it closed right now? How many pips would I make? They would pay me for the full 25 pips. But I'm only 1 pip profit. Doesn't matter. I get paid for the full 25. Lovely, tell your mum. Well, Marina, technically so is mine. I already drew it and showed you guys, right? So easy peasy lemon squeezy, right? Oh, okay, Marina, why not just trade with binaries? Great question. First of all, binaries do not pay interest, so you can't carry trade. There's no upside there. Second of all, one benefit of a binary is that there's limited risk, and it's all predefined, right? You have limited risk, predefined reward. So if you're scalping the news or something like that, it's a great opportunity. I also have some long-term trades going. Where is it? See, I have a couple of gold trades that I'm short that expire the second day of April. Gold right here. Some long-term gold trades that expire April 2nd. So, which is fine because gold wouldn't pay me interest anyways. The downside is the same as the upside, okay? The downside is that you have limited profit potential. You have limited risk, but limited reward. In the cash market, you have unlimited risk, unlimited reward. Well, if I want to trend trade and be in a trade for hundreds of pips, cool. I can let my winners run. I just move my stop to break even, let it run and run and run and run, and I can make 100 pips, 200 pips, 500 pips, 1,000 pips. Great. That potential is there. And if the yield differential is in my favor, I collect the swap, which is the interest rate payment on top of the pips. 7 days a week, I'm earning interest. So that can be really good for my portfolio. And I cannot enjoy those benefits if I'm in a binary. So binaries, like all options, were designed purely to hedge risk. Now, of course, as you know, there are quite a few speculators that trade options purely out of speculation, but they are the minority in the market. It's not why it was invented. So what I've taught in the past is a scenario of if you were fundamentally bullish on a currency pair, but the market is still technically bearish, but you're at a very good place to buy, you're very bullish, you're at great support, and you're just like, man, I want in on this, and I think it's going to run forever, but the trend hasn't developed yet, it's still technically bearish, well, then you could long its support and then hedge your risk by selling a binary so that if you're wrong on the cash market, price is going to come down, hit your stop, and you're going to lose money. But you had the opportunity to be in the long-term trade. So you had the opportunity, you took the shot, but you lost. So price came down, hit your stop, but you hedged with your binary, which was fine because it's not very expensive and it's limited and it's short term. And so price fell, but you were hedged with the binary. The binary pays you your money, doesn't cover the full losses, but might cover almost half of your losses, depending on how much you put on the option, right? So you could cover, let's say you can take a little more aggressive trades at support in the direction of the long-term trend, but while the market is still technically against you, take that shot, have the full opportunity, and cut your risk in half by hedging with a derivative. So, okay, now the new question is, if you're not trading with the fundamentals, can you trade with the binary option? Yeah, fine, but here's the long-term problem with this, and it's the problem that faces 90% of all amateur traders that have been trading for a year or so and are still not finding large profits. They're just basically break-even traders after a couple of years. When I analyze their trading, 99% of the time it's because their trades are good, but they don't let them run. Right? Traders that have been around for a couple of years, they've been burned a few times too, haven't they? So they got some scar tissue that I got to cut through. What happens is they're so unbelievably happy to make 50 or 100 pips. They're like, oh my God, 50 pips. What a good day. And they're out. Now, there are lots of gurus out there, too, that kind of teach this, right? And it does a lot of people a disservice. 50 pips, fine, and then you take your 50 pips and you walk away, and that's what you did for your day. The problem is, on the long run, if you just did any basic cash flow analysis, you'd find out that on the long run, that is a losing strategy and that you will fail. Guaranteed. So what you're going to do is you need your winners to run. But I was asking people yesterday, how many people have gotten out of a trade simply because it was 100 pips? Like you were staring at it, 98.3, 98.7, 99.2. 99.5, and you still haven't clicked out. You're waiting to see 100,000. Then it goes 99.5, 99.2, and then you're like, oh, 98.3. Oh, I can't get out now, right? And you're just staring at it, right? And then you just can't wait to get out of this magical 100-pip trade. The problem with that is the market obviously doesn't give two hoots about your 100 pips at all. And second of all, like, why are you so hung up on this triple digit? So like yesterday's short trade, you could have taken your 33 pips profit. You could have taken 50 pips profit and called it a day. You could have left it and 100 pips, and then you're so unbelievably happy to have 100 pips you get out. But as you know, it dropped 200 pips, as it was supposed to. And that's one of the problems is, amateur traders, that have been around a couple of years, they usually don't take the bloodbath trades anymore, right? They just don't have 500 pip losses anymore. They've been burned too many times. But they don't let the winners run, and they get stuck at break even over and over and over again. And I believe the hard work is doing the analysis, setting up the trade, waiting for the price to get to your sell zone, waiting for the reversal pattern and the retracement, and then selling and dropping the stop, and then eventually over the course of time, moving the stop to break even. To me, that's the hard work. The easy part is letting it run. That's why, I said I want to be FX Person of the Year at FX Street. And one way I think I could do it is if I can get you guys into your first 1,000 pip trade. Not that it's 1,000 pips and it's worth a whole lot of money. You're probably on a demo or trading minis anyways, right? It's not a lot of money. But I want to blow your mind. And in fact, I want to open it up. Right? I want to open up your mind so that if you only get 50 pips, you're like, oh, well, kind of disappointing, but at least I had the opportunity. Okay? I want you to be open-minded to the potential and to the opportunity, because if you've been around a couple of years, you know what? I think you have the potential in you. And more often than not, you're just trying different versions of the same thing but not getting any new results. I think if you're setting up your trades, if you're doing something like buying at support and selling at resistance, then my goal is to simply reinforce that what you're doing is correct, that we don't need to make it more complicated, and that one of the most important things that we need to do is to open your mind so that you can let your hard work provide greater reward, not changing things, not adding complexity, not selling you my magic formula or my custom indicator, simply by having you focus on moving your stop to break even so that you can remove risk and then go find another trade. And if you stick with me, guys, every Friday at FX Street, I'll help you become a huge success. That's my promise to you. But you need to do the work. We got a deal? Cool. No backsies. No backsies. By the way, USD yen just hit 119. Wink, wink, nudge, nudge. Wink, wink, nudge, nudge. So I think we're out of time. Thank you to FX Street for being tall, good-looking, intelligent, kind-hearted, fabulous people that dress well and have taste and style. Thank you to FX Street. And if you want to hang with me every day, I'll be over at tradersway.com. All you need to do is open up a demo, or even better, fund it with a live account, and I'll be there for you every day. Peace on earth. May the pips be with you. May your profits be above average. And please enjoy the weekend.